Okay, so hello guys, welcome to my YouTube channel. So today I want us to talk about institutional order flow. Ignore the weeks. When you are talking about institutional order flow, you should ignore the weeks and look at the bodies. There are a lot of liquidity below them. Okay, so you should ignore the weeks when you are looking at the institutional order flow. And when we look at institutional order flow, think like the market efficiency paradigm, where is the maximum amount of liquidity in relation to where the market has traded from and where the traded presently. Okay, so when you are talking about institutional order flow, we should look at the market efficiency and where is the maximum amount of liquidity in relation to where the market has traded and where they traded presently. Okay, a price is delivered to engineer efficiency for smart money entities. So from smart money to liquidity, and for every down candle there has to be an up candle. The market will seek liquidity after that. The bodies of the candle should respect the mean threshold of the body of the OB. The institutional volume is above and below the bodies of the candles. The wicks are retail, so the bodies are the real low high. Okay, we have our chart here. You can pause and have a look at it. We are focusing on the bodies and leave alone the wicks. You should ignore the wicks. The wicks are not significant value in terms of institution order flow. We just know there are some of stops below the wicks. Now, I told you, when you see some liquidity, you should expect some liquidity sweep, like this point here. This point here is a liquidity sweep of this point. You see, it did not buy exactly at this point, but it bought just below this point. So you should know where to place your stop loss. And I told you, when you are trading liquidity, you better not place a stop loss. Okay, but you can place a big stop loss to be safe when the liquidity sweep is to happen, so that it doesn't hit your stop loss. So it doesn't have to go through the wicks. All we need is to go below the bodies. The recipe for everything is the HTF liquidity. Everything is a hedge. They're constantly buying and selling between rage extremes. Okay, you can see like what I'm talking about in these charts below here. They have to take their long orders off here. Okay, off here, this point, and that's why you'll see that unwinding this is basis of a market sell model. You see, it's the basis of a market sell model, this point here. Okay, ICT also uses order blocks. Is the ICT mitigation block. That's where you sell explosive price action. When we react off to that, they're covering their shorts and buying more. After liquidity, we expect a reversal. After capture of every liquidity, we expect a reversal. After capture of every liquidity, we expect a reversal. And I told you, liquidity is the best strategy to use when you are trading Forex, and you'll be able to make good money. So I'm almost winding up for this lesson. Institutional order flow is the seeking of large institutional liquidity. It's going to be found on the monthly and weekly, and you see that being traded to on the daily. So use higher time frames to trade institutional order flow, so that you can be accurate on what you're doing. So found in the monthly and the weekly, and also on the daily time frame. If you do your trading around these levels, you see everything significant price swing happen before they get there. It's looking for stops at the monthly, weekly, and daily. They either want to take people out of the market place or draw them into counterparties to their intended purpose. So, um, and this is the nature of institutional order flow. You can see this very clearly. Look at the charts. This is the liquidity. After it was captured here, we had a reversal. You see, we had a reversal coming like this. Okay, this is the liquidity here. After it was captured right here, you see, now this, you see, it is not capturing exactly at this point where this thing is, where this point is. You see, there was a liquidity sweep right here, this one. So when you're pressing your stop loss, remember to press a bigger stop loss. So after liquidity was captured at this point, we had a reversal going up trade. Trading liquidity is very simple, and I hope you apply that in your trading, in your day-to-day trading, and I hope you're able to make some money. So see you on the next video. If you like the video, please remember to subscribe and comment down below. So see you on the next video. Bye bye.